Hey everyone, welcome back to Corporate Decoder. Today, Mobia Medical Mobi just filed an 8-cake announcing their second quarter results, and I'm seeing a key takeaway about their cash position. Quick note, this is not financial advice, just my take on public filings for educational purposes. Mobia Medical is essentially telling us how much money they made and how much they spent. And it sounds like they are in a much better spot than before. So, Mobia Medical Incorporated is a company that operates in the healthcare and medical device sector. They had their initial public offering, or IPO, recently, which is when a private company first offers its shares to the public. This filing is a current report, or 8K, which companies use to announce major events that shareholders should know about. The main reason for this filing is to share their financial results for the quarter that ended the 30th of June 2026. They issued a press release detailing this, and that press release is attached as an exhibit to this report. While the actual financial numbers aren't directly in this 8 document, the press release it points to is the place where those juicy details live. Think of this 8K as the official announcement that the financial report card is ready. This section lists the documents that are part of this filing. The most important one here is Exhibit 99.1, which is the press release dated the 11th of August 2026. This is where all the financial performance information for the quarter will be found. The other exhibit, 104, is just the cover page information for interactive data, which is standard. Looking at the context provided, Mobia Medical Mobi is a healthcare and medical device company. It has a market capitalization of around $418 million. Recent headlines suggest that following their IPO, they've secured about $134 million in IPO proceeds and have a total of $177 million in cash. This is a significant amount of money for a company of this size and indicates they likely have a strong balance sheet. The news also highlights that their revenue has doubled, which is fantastic news, especially with the IPO cash bolstering their finances. In terms of institutional holdings, companies like Aberdeen Group plc and BlackRock Incorporated are among the top holders, which often signals confidence from larger investment firms. Now, for the real insights, we need to dive into what that press release, Exhibit 99.1, likely contains. Based on the headlines, we can infer they are reporting strong revenue growth and a healthy cash position. For a company that recently went public, maintaining and growing this cash is critical. This cash can be used for research and development, expanding operations, making acquisitions, or weathering any unexpected downturns. When we look at their stock performance, the 52-week range shows a low of $10.19 and a high that is not specified, but the current price is also not specified. This often happens right after an IPO or on days with significant news. The fact that Mobia Medical has doubled its revenue is a very positive sign. It means their products or services are in demand and their sales strategies are working. For a company fresh off an IPO, this kind of growth suggests they are executing well on their post-listing plans. This is the kind of momentum that investors look for. Comparing this to other companies that have recently gone public, especially in the medical device space, strong revenue growth coupled with a solid cash balance can set them up for future success. For example, companies that can effectively deploy their IPO capital often see sustained growth. The key for Mobia Medical will be how wisely they use that $177 million in cash to continue this growth trajectory. The biggest takeaway here is the confirmation of strong financial health post-IPO. Doubling revenue is a substantial achievement, and a substantial cash pile provides a significant buffer and runway for future development. This suggests the company is not only viable, but also has the potential for significant expansion. The risk I am watching is how effectively they deploy this capital to sustain such aggressive growth. What I am actually looking for is continued revenue growth and profitability in the upcoming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like this video. Subscribe for more and join our Discord community linked in the description.